Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, September 23rd, 2020. Market's about to open. It's 9:26 a.m. And I finally just had my internet restored for the first time since Monday. The cable was cut. So I wanted to get a video out. There were a few things, and what I wanted to do in this video, very brief update in QQQ. I did post a pretty comprehensive update with some charts, including the FANG stocks, some the recent bullish developments that we had, whipsaw signals, divergent low, everything else, false breakdown. So I'll touch on that, and then I want to look at gold and silver. There's some interesting developments there, the U.S. dollar, etc. GDX as well. All right, so in QQQ, not much more to add than I posted yesterday. Those divergences heading into the breakdown, they were not confirmed. We had the PPO still headed lower. Remember, PPO is a momentum indicator, and it was pointing down with the potential, should that breakdown have stuck, which it looked like it was going to. We had that breakdown. Usually they're going to come in and buy it at the open. We gapped down. That was yesterday right there, and then they just bid it up. They didn't bid it immediately at the open, but about an hour after the market opened, that's when they started to reverse. So what that means is the buyers were in control. They stepped in and they were able to foil a breakdown of what, in my opinion, was a well-defined support level, big level. So there's no way, in my book, no way to spin that as anything but bullish near term. Sure, it was bearish when we broke down, but that's always talk about being flexible. And even last week, I even said if that happened and then they reversed it, went up there, that's it's going to be bullish. Now, could it be a whipsaw to the other side? Yeah, but play it, like I say, play it by ear. The charts are dynamic; they change day to day, minute by minute. So as of now, to make it very simple, as of now, until as long as the Qs hold above that level, that puts the near-term outlook on bullish. Now, very, very near term, we had a little minor uptrend line right here off the lows. That's broken. We're again, the opening bell is going to ring in 2 minutes. We'll see what happens before or after the open. 262, 20-ish is still support, give or take. It's still the bottom of that range. Remember, this is the big boxed range. It shows very well on NQ as well, even better on NQ. And this was the minimum bounce target right here, where we're at right now. Remember, we had this gap from the other day, and that gap is roughly between, I already had this level here before the gap, 274.90. That was a target on the way down. That was actually T3 way back when, which was hit. T4 was hit, T2, T1 on the way down. And we went about halfway to T5 and then reverse. So that's that. So here's your resistance levels to watch today. Bullish if we can get above 274. We'll call it 275 to be safe. That should open the door. Quote unquote should, doesn't mean it will, but should open the door for a move up to about that 280.32, an important level again. Remember, this is all near-term stuff, and I try to be very clear when I say near-term bullish or near-term bearish. Long-term, let's keep in mind we had that bearish crossover on the weekly PPO. This is QQQ. I've gone over that quite a bit. This is a bearish crossover right there. The last time we had a bearish crossover, especially with clean separation on the lines, was right here. That was before the big plunge into the COVID lows. So, had you gotten short or got out of your longs back then, you would have averted or profited from most of this 31% or so drop in QQQ. The time before that, you can see they were right here. Bearish crossover there, bearish crossover there, and you got that and that. Those are, I'm sure that was maybe 5-10% or more. That was probably about 5. I'm just eyeballing. Bearish crossover there. So you get the point. There's been, in going back into 2018, had you just gotten out of your longs or shorted on every single bearish crossover, you would have done pretty well. So that's there, and I don't try to give wishy-washy analysis, but I point out everything that's there. So where I'm going with that is sometimes, and well, not sometimes, I always put a higher weighting on longer-term developments. Now, a bearish PPO crossover in the weekly is not the be-all, end-all, but it is something to note. And remember, everything I've talked about, the extreme sentiment readings and all that, my gut is that this 60-minute divergence, which I've said many times, this is what I look for in a bull trend, for the next, big leg up, I typically cover all shorts and go long on bullish divergences. I pointed out the divergent low back in March, and just days before said no more shorting for me. It's not. I said it's recommend it's not advisable. The risk reward was not attractive. The upside. The case for a rally was strong, and then we broke out. There was your buy signal, and boom, we never looked back. Now, certainly that little 60-minute divergent low didn't project for all that. There was a lot of Fed juice in there, but either way, it was, the turns are identified in advance and in real time with the breakdowns from these divergent highs and divergent lows. So now where I'm going with that is, yes, near-term bullish, and so far that's what we had. Last couple days we rallied, but I suspect, based on everything I just showed, not everything, I just showed you the bearish cross on the QQQ weekly chart, but everything that's gone on with the sentiment extremes recently, and more importantly, the lack of fear afterwards. During this correction, did the VIX rally? Yes. And that even gave us a heads up. The VIX broke out before the correction started, and it rallied, but it's a relatively muted rally. It sold off pretty quickly, and the VIX is still down towards the lows that it's traded at throughout 2020. You can see we're not that far up. So this shows me no fear. Everybody's buying and I'm speaking metaphorically, of course, not literally. Everybody's buying the correction, thinking great time, Apple, Tesla pull back, and the VIX pulled back. If you want to look at it from a pure technical perspective too, it pulled back to support. This is a level I've had on this chart for a long time, 25.58. So basically, I see wave one up. There's the breakout, bullish falling wedge pattern. Corrective wave, and what could be the next leg up. Back here, it was a one and done. I have to say that. We don't always get multiple waves, but quite often we do get a first wave up, pull back, and then boom, your next wave up. And on the VIX, it's usually a big one. And this will, I can tell you right now, this or more will most likely coincide with a breakdown or a failure of this rally. Like I said, fewer things in trading and investing are more bearish than a full foiled bullish setup or bullish breakout. So, and the bulls, that's pretty bullish that they ramped that breakdown. So right now, there are so many check marks on this 60-minute chart. Again, not on the long-term charts, but on the 60-minute chart. And I factor in a lot of other things than just price action, more than just volume, things like that. But a lot of check marks here. So what I'm trying to say is the onus is on the bulls to take this and run right now. Take it to the top of the trading range, and then ultimately break out, go on to back test that trend line, maybe even go to new highs. I don't think it's going to happen. I think it's going to be foiled, and if it does, I think it's going to be, we're still going to get that waterfall sell-off. That's not it. That wasn't what I was looking for. And so I think if we start to, this breakout and recovery of the bottom of the trading range starts to fail, I think the selling will begin to accelerate. And I can say this now, if we take out that previous low, that's where most likely the waterfall type selling will start, if it happens. And the thing is, how do you trade it? I'm giving you scenarios. We may go up, we may go down. It's easy. Right now, the near term, the price action, the momentum, the breakout, everything's bullish. So if you want to trail up stops, we may go on up. We may go on up to any of these levels. When you go on to back test that trend line, we may go on to new highs and just trail your stops up if you're long and bullish. If you want to short, or if you are short and you give it a little room, look, we're not that far back inside of the trading range. It is a recovery, so you gotta, like I said, you have to respect it for what it is. But we're, relatively, let's see, we're right now, let's just go where we're at right now. We're only about just over 1% back within the range. So this could be a whipsaw. I mean, this market has been plagued with whipsaws. So I'm leaning this way. And how do you trade it? Well, if you're giving it a little room because you're already short, fine. You really don't want to see much above 275. That's where I think logical stop, or you can scale out. That's one thing to do too. Put a stop above. This is your first resistance here, a little bit above that. Next one there, and then of course the top of the trading range. Break out above that 280.32 level. That's going to be pretty bullish. Could you short here? You can. It's aggressive because you don't really have any sell signals right now. In fact, you just had a sell signal foiled, but you could short here. Again, a bit aggressive, but the risk reward's pretty high. If you short here, expecting this reversal to fail, and again, just keep your stops relative to what your price target is, because if it does fail, we're going to probably take a pretty swift move to at least, again, this is now minimum target, if we have another leg down, and that's a target zone about 251.70 to 254, somewhere in there. And you go out to the daily chart, you can see, there's quite a bit more downside. And again, go back in time and look at the previous corrections that followed those bearish PPO crossovers, and you'll see there was more there. SPY, it would certainly help to see SPY confirm, and that's one thing we don't have yet, and that's why my bearishness right now is somewhat tempered. We need to see, it would really help to see a bearish crossover on SPY. Last time we had them both here right before when the COVID drop started. These other two pullbacks there, bearish PPO crossover, and right there, bearish PPO crossover. These match those PPO crossovers on QQQ. So SPY right now, as you can see, we do not. The lines have not crossed. So really, it all hinges on us this rally fizzling out right about now or by the end of the week, and getting some more downside, ideally taking out the recent lows in SPY and getting that crossover. Okay, let's move on to gold, silver, US dollar, and all that good stuff. It really, to me, a big part of it's the US dollar. You guys know even though I'm not a big Forex trader, I'll trade whatever. I'll trade it at times if the opportunities are there, but I like to watch the dollar to get cues on where gold's going, because gold is a dollar sensitive asset, tends to move inversely. So I mentioned this yesterday in one of the comment sections below one of the homepage posts, the recent ones. I have a resistance zone here, and it's 93.636 to about 93.862. By the way, I'm sorry guys, this is DX dollar futures if I didn't mention it. Up here it tells you this is an hourly chart, meaning hourly candlesticks or bars, 3 months of price history. And so what I'm looking at, you can see right here, I'm going to show you the reactions on the top level. Reaction, 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 and again a reaction. Now you also have some reactions along the bottom there, and most recently these two reaction highs. So that was a resistance zone, and we broke out, and there's really not a whole lot of resistance all the way up till here. Now we're not too far above there, and the dollar's been tricky. It'll break out and then pull back, but it is stair-stepping higher, and I've been pointing that out for quite a while. The bigger picture, at least on the 60-minute chart here, is this bullish falling wedge pattern. Big bullish divergence right there, right? And we broke out, and we have been moving higher since. We consolidated for a little while, and we broke out of that consolidation range, and so that's bullish. And that's also put pressure on gold and silver recently, right? So now, the last time we broke out, I had highlighted this little bearish rising wedge that came, formed right after the breakout above the bigger bullish falling wedge. There's your divergences confirming the bearish rising wedge, and that gave us that correction. And the correction played out more so in time, meaning we had sideways trading. There was a pullback, a drop in price in TX, but traded mostly sideways, worked off those divergences, so they did play out. And now we have on this breakout, one thing that's given me a little pause is this bearish rising wedge. You can see complete with negative divergence right there. So that could be the catalyst for a false breakout in the dollar. Maybe, maybe not. Sometimes divergences are burned through. As of now, the breakout's intact, so I wanted to point that out. That would indicate more upside in the dollar, and less. And I have a little trend line here that might trigger it. We really should hold above 93.636 after this breakout to keep the breakout intact, in my opinion. That's what should hold. Anything much more than that could send us back to either these support levels. And if so, this is, remember, a falling dollar is bullish for gold, rising dollar is bearish for gold. Now let's get to gold. I'll get to the ETFs because I know a lot of you like to trade those, but I want to look at the futures first. This is GC, 60-minute chart, gold futures. We had this trend line here. Way back here, we had a 60-minute bearish rising wedge pattern that marked the top. And at the time I was bearish on gold, and have been mostly since. It's been mostly a sideways consolidation, so I've kind of moved away. Haven't been trading the metals much. I'm still longer term bullish on gold, but all the case the case that I made for a correction in gold was very largely based off the weekly chart. I went over that quite a bit. If you're new to the site, here I'll show you what I'm talking about, because I do realize that some people come into the site, some are members that aren't active all the time, come in once in a while to check up. All right, so this is GLD weekly. Just to recap what gold did. It's been in a bull market since late 2015, no doubt about that. I've been bullish on it for a long time, but here is our major bull market blow off top back in 2011, last bull market in gold, and that's always going to be a well-watched level, resistance level, reaction high like that. So we hit it. We had a brief momentum fueled overshoot, which is normal because you had a parabolic run. Look at that near vertical run into that level. So I call that a momentum fueled overshoot. And here's our correction. So far, it's been a correction more so in time than in price. I always say stocks or index or a commodity can correct in one of two ways or a combination thereof, and that is in price or time. And this has been a little of both right there. Some support there. I still think we might come back to this trend line, but that's been the longer term case. And on top of that, the euro-US dollar pair, which is pretty much a proxy for the dollar index in reverse. At the same time, I said the euro-US dollar pair had run into major downtrend line resistance on an extended leg up. There was a bullish divergent low that was a catalyst for this, but we checked that trend line, and like I said, I expected a reversal off there, and that's what we got. That trend line held 1, 2, 3, 4, 5, 6, 7, 8 weeks, and finally gave up the ghost. I gave you this uptrend line a couple weeks ago. We broke it, and boom, this is that leg down in the euro, which means the thrust up in the dollar. Remember, this chart, when this goes down, gold goes down with it. When the euro-US dollar pair is rallying, means the dollar is falling, and gold, that's bullish for gold. So that's a sell signal. That doesn't look good for gold, bode well for gold near term. And we could come all the way back here. So there may be more downside in the euro, more upside in the US dollar. A move like that would probably coincide with a move up to that next target there that I showed you on DX earlier. All right, so now back to the metals. Oh, silver. Silver is the one that really stands out to me today. I see more in silver than I do in gold, although there's some other things I want to point out in gold. Let me find my silver chart. Looking at a ton of charts down below. There it is, silver. Okay, this to me is compelling. This is a trend line I've had on this chart for a while. Comes in back there. Silver's hit that trend line support, and here's a price support level I've had on this chart for a while. These are SI silver futures, 60-minute chart. So silver has corrected. Remember, I had us trading here in this trading range for a while here. We broke it, and that was it. Boom, big drop, waterfall sell-off. That was an objective short entry there, right down to my first target, first and only downside target, and intersecting uptrend line resistance or support as well. So I'll say it now. I think silver is going to bounce here. I think silver is an objective long right here. I think it's an objective long with a stop not too far below. The only thing from me going aggressively long silver right now is what's going on with gold, which I'm going to get to in a second. But I do think silver will bounce, and bounce to where? It's tough because the dollar broke out. The dollar breakout doesn't have to fail, but most likely it would certainly help to get silver all the way back up here to test that, which is now resistance, that former support at 26,220. So I'm going to just say that's my maximum bounce target. It would be a nice lift if we get it in silver. That would be at about a 12, 13%. I'll call it 12% or so gain if we get it. Other than that, I can't really find a well-defined target level, and you may just want to trail up a stop or go for a 3, 4, 5% bounce in silver, again with a stop somewhat below. And also, I think if I didn't mention, you can see it here, a little positive divergence as well on the 60-minute chart. So that's the best looking setup I've seen for silver in a while. I would have much stronger convictions if The dollar didn't just break out, but again, maybe the dollar fails. And hey, there are times where the dollar rallies and gold or silver rallies as well. So that inverse correlation between those two is an on and off thing. It's mostly on. You go back in time, there's no arguing it. But there are times where the dollar can rally in silver. So there it is. And again, I talk about objective entries. Quantify your risk. The downside's minimal if you have a stop somewhat below. And I'd be more apt to just, if you start to get some upside traction, maybe trail up stops, let it run. But I would certainly take profits a little bit shy of that 220. I would be shocked if we get up there, especially on an impulsive rally, and the sellers don't step in there around that level. So that'd be a current bounce target right there. All right, gold. Let me go to GLD for you ETF traders. Here's the thing about gold. On daily chart, we need to go over to daily chart. Highlighted recently this support level right here. There was a gap, so I had a support zone, but the more important line is right here at about 179.33 is where I have it on my chart. 1, 2, 3, 4, 5, 6. Just a lot of reaction. 7, 8 recently. Look at that little stick save. We intraday break and we snap back above it. Closed right about on it yesterday, but now down below it. So this is a breakdown in gold, and this does not jive with silver bouncing because it gave up support. So unless this proves to be a whipsaw, which it might, and I'm a little bit leaning that way. And if it is, if gold can recover that level soon, then that's going to be pretty bullish, and that would help silver, the case for that rally in silver. So that's why if you're going to go long that bounce for silver, which I much prefer over gold right now, because silver, remember, silver just took it on the chin recently. Gold didn't drop nearly as much, so there's an oversold bounce play to be made in silver as well. And you can see on my SLV silver ETF daily chart, we're right above my 2147 support level. I've had this line on this chart for a long time. Reactions there. Look, did it break support? Yes, and it did impulsively. So that's all bearish. Like I said, there's cross currents. And I'm only, pointing this out for active, nimble traders that might want to play that bounce in silver. I am seeing some technical damage done in the metals lately. Again, like sell signals, that impulsive breakdown, follow through. So maybe a little more downside there on SLV. But again, when you look at the futures, which I did earlier, and I'll go back to, pretty decent support. So that's it. Step in. Watch. Maybe you want to see the level defended. Maybe you want to see the dollar break down from that small little wedge on the 60-minute chart of DX. Up to you. I just wanted to point out that that seems interesting right there. Okay, last but not least, I just wanted to loop back to the broad markets again, and you're seeing me covering almost exclusively QQQ and NDX lately, because again, to me, that's what it's all about, those market-leading FANG stocks. So I pointed out the recent bullish developments on the 60-minute charts, and I pointed out how those need to be respected, and certainly the people have been buying. But like I said, I suspect they'll fail, and if they do, to me, that's quite bearish, and again, could open the door for a much larger move down. But let's keep in mind what's going on in QQQ. When we look at it from a price perspective on the daily chart, because that's the one thing I didn't do. I started with the 60, and then I jumped out to the weekly. Remember, these were sell signals highlighted, in advance, and then as they happened back on, I think it was September 2nd or 3rd, divergent high, breakdown, impulsive selling, and recently we had that false breakdown on the 60-minute chart, but you can see on the daily chart what we did is we only went through their intra-period, and then recovered it. So we never really had well, at least not on the daily chart, a confirmed breakdown with a solid close below this 246.82 level right there. And if we take away all these lines that I have, by the way, and of course we did take out the primary uptrend lines in SPY and QQQ as well, and we're well below those. So when we're looking at it from the daily chart, nothing but bearish action yet. That little 60-minute whipsaw that I focused on recently, yeah, that was near-term bullish. But on the daily chart, nothing but bearish action so far. I'm going to take away all the lines, and what we have is the market in a downtrend, or the Qs, and SPY as well. This is a downtrend. Downtrend is a security making a series of lower highs and lower lows. That's it. So if you want to look at it from that simple perspective, what would be bullish? First would be a break above this previous reaction high, then this other previous reaction high, and really from there, that's your next one right there. So that's that. And we may continue to zigzag lower here. So I'll wrap it up with the futures. And again, here's our big clear box. There was a little whipsaw in the futures. Put in that divergent low. And we're back within the range, but what I'll be looking for, what would be bearish is a break back below the bottom of the range again. I still think, even though it was, taken out with a whipsaw, I still think there's enough reactions to make this an important level, and most certainly that previous reaction low. I can say this too. I think if we take that out and we get anywhere close to there, I think we're gonna take it out. So that's it. And bullish scenario, if we continue up from here, whether we zigzag, however we do it, pretty big resistance at the top of that range. And, going to be near-term bullish if we get up there and then take that out. That's right now is my preferred scenario, and I'll leave it here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed.